Good afternoon, everyone. My name is Nicole Vassilaris. I am the Senior Vice President of Government and Legal Affairs for the National Marine Manufacturers Association, and so pleased that many of you are joining us on today's webinar. This is the largest one we've ever had, so we hope to provide you with some valuable information on the $2 trillion stimulus package and specifically how it helps the boating industry and our businesses. First and foremost, I want to send my sincere wishes for all of you to stay healthy and safe, you, your families, and your employees during these incredibly uncertain times. NMMA stands ready to be a resource for this industry to help secure as much government funding as possible to navigate federal, state, local, even international actions that we know are impacting your business operations, and to do our best to position this industry on the other side of the pandemic. A couple housekeeping items. One, this webinar will be recorded. We will also be sending you this PowerPoint slide so that you can review it after the webinar. If you have any questions as we're going through these materials, there is a chat feature. I'd ask you to post your questions on there. We'll do our best to go through them at the end of the webinar, but any unanswered questions we will directly respond to. Another housekeeping item. This webinar is not intended to be any legal or financial advice, but really to help you and your companies distill the provisions of the most recent stimulus package and any new programs for government assistance. I'm incredibly pleased today to be joined by a long-term consultant and friend of the industry, George Cooper with Forbes Tate Partners. His expertise on the political front has been invaluable to NMMA over the years, and particularly during this incredibly crazy last few weeks. I know that he'll be able to give you some valuable insight as you consider your business operations moving forward. Next slide. So what are we going to cover on today's webinar? We'll first kick it off with a bit of an update on the federal response to date. We'll review NMMA's stimulus priorities and then really go into a deep dive of the CARES Act. That is the latest stimulus package that was passed by Congress and signed into law just last week. And then we'll give you an update of what we expect to be on the horizon for the future, as well as next steps at the state level. I will warn you, there's a ton of information that's going to be going through in the next few slides. There is a resource guide at the very end, so you'll be able to provide direct links to some of the details that we're providing. And again, if you have any questions, please don't hesitate to ask them using the chat feature, and we'll get to as many as possible and do follow-up after the webinar. So with that, next slide. I'll turn it over to George to give us the federal response to date.
Thanks, Nicole, and it's good to be with all of you, figuratively speaking, and I appreciate the introduction. I'm just going to cover, sort of do a scene setter before we get into the guts of, I think, what most of the attendees, most of you all are interested in, and that's what came through in the CARES Act signed into law by the President on Friday. It was less than a month ago, believe it or not, that Congress moved the first COVID-19 related piece of legislation through Congress to the President's desk. That was a relatively small amount of money back on March 6th at $8.3 billion. And then, as you can see in the slide there, and may recall less than 2 weeks later, another piece of legislation was passed, that one emanating primarily from the House and House Democrats led by Speaker Pelosi. And then we had the massive $2.2 trillion package Friday signed into law, the CARES Act. So we can go to the next slide. So in phase one, as you may recall, this was actually a fairly straightforward piece of legislation. This was really just looking at the available funds for the key agencies and making sure that buckets of money were as full as they seemed to need to be at that point in time. So that was mostly to public health agencies. There was also an immediate recognition that we were starting behind the 8 ball when it came to our testing availability, so money was set aside for that. And then also early anticipation back then that money was going to need to be set aside for subsidies for small business loans. that's where we started. And we go to the next slide. The next piece of legislation, circumstances basically led for that to emanate, as I said, from the House of Representatives. Much of this legislation was negotiated out directly between the administration as represented by Treasury Secretary Mnuchin and Speaker Pelosi. The Senate, as you may recall, Majority Leader McConnell was saying, at this point, whatever those two agree to, we will be prepared to move it in the Senate, and that's indeed what happened. The focus in that piece of legislation was really on individual workers and employees. Again, testing was an emphasis. Language was adopted there to ensure that if someone needed testing, it would be free regardless of what sort of health care they had. And then there was action taken in that package on paid sick leave, and then anticipating the need for expanded unemployment insurance benefits. So that was phase two. We can go to the next slide. Good sort of infographic here as we move to phase three in the CARES Act. You can see roughly how the funding in this $2.2 trillion package, I still can't get those words out of my mouth, $2.2 trillion, how those were roughly apportioned. We'll spend much of today, Nicole's going to take us through, and I'll help, looking at the money set aside for small businesses. You'll note there was about $153 billion set aside for public health needs. That, again, was sort of focused on hospitals, medical equipment, et cetera. The biggest pot, of course, was for individuals, and as I'm sure you've been tracking, there's anticipation of checks, those checks going out to individuals soon. We'll cover that a little bit. One I would call attention to before we move on into the small business provisions and other parts of this is the money set aside Friday for state and local governments. I would flag that now as something where there's clear consensus on an item that'll be addressed in the next big legislative package from Congress, as I'm sure you're hearing your own governments, state and local, talking about the need for a lot more funding than what came through in CARES. So we can go on to the next slide. You know, I have found it very useful, and I think lots of people have, particularly people who've worked here in Washington for a long time, to look at the precedent set back in during the recession back in 08, 09, and how Congress and the government acted at that time. If you add up the first three pieces of legislation I just covered, in part, we're going to move into more detail on CARES. You know, you've got something that can be compared roughly to TARP. This was a stop the bleeding series of legislative actions, and TARP was a stop the bleeding action by Congress. I think it was about 5 months later, you had Congress move in early 09 to pass what was much more of a stimulus package. So some people have been using the term Stim 1, Stim 2, Stim 3 on these three congressional actions, but really we haven't gotten to what you would actually consider to be directly stimulative funding for the economy, and that's what's really being contemplated going forward, which we'll cover. So we have basically done at this point something akin to what was done with TARP, and we're looking ahead to something that'll have more stimulus in it. You can see the amounts. It's startling to see the comparison in the amounts of funding. If we look at the $8.3 billion done on March 6th, the $100 billion just covered on what we call phase two, and then the $2.2 trillion in CARES Act. So in just this month of legislative action, we're looking at funding equivalent to 10% of our GDP, about $3 trillion. Okay, we can move on to the next slide. And I'm going to hand it back to Nicole, and she can cover where we've been focused in terms of this industry's priorities.
All right, thanks, George. So looking at NMA stimulus priorities, I think it's important to keep in mind how we approach this. And it was really from two lenses. The first is, what were the lessons learned from 2008? The government programs that worked, those that could be improved, and those that just ultimately didn't work. We understand that this is a completely different financial situation, but it really helped to provide a foundational base when we went back to Congress and said, what does the boating industry need? The second lens that we're looking all this through is really the ecosystem outlook. We know that the ability of this industry to sustain itself during the pandemic and come out on the other side, it is important to protect all aspects of the ecosystem, whether it be manufacturers, dealers, distributors, boatyards, all the way down to the consumer itself. And so it's with really those two lenses, the lessons learned as well as an ecosystem outlook, that we have developed our stimulus priorities, and ultimately from hearing from you. The most important, the first and foremost priority we have been advocating for is ensuring financial certainty for businesses. These provisions, whether it's short-term lending, supply chain, business operations, liquidity, employee protection, over the past few weeks, that's what you have told us is most important. And so that is what we have been loudest on Capitol Hill and in the White House. The second bucket is tariff relief. This industry over the past 2 years has had a particular pain point with tariffs that have been imposed on us. And now more than ever, businesses are seeking to reduce all their costs. And so we will continue and have been advocating both in Congress as well as the White House to remove all tariffs and retaliatory measures that are impacting your overall cost of doing business. And then the third bucket is continued access to public waters, maintaining as much access as is appropriate given health concerns and safety, but also positioning this industry to be at the forefront of reopening and continuing to bolster that outdoor recreation economy, which has given us so much in the past few years. So it's really those three buckets that I hope you'll see have been our priorities, what we've been advocating for at Congress, what we've been advocating to the White House, and even to state and local governments to help this industry during these times. Next slide. So navigating the CARES Act, here's where we're going to kind of get into the nuts and bolts of what is included. I think as we talk about the wins for the boating industry, it's important to keep in mind this has been an unprecedented lobbying effort. I mean, George just showed you the amount of bills that happened really in a month's time frame, the amount of funding that was occurring. It was a truncated timelining, and we're all doing this remotely here in Washington, D.C. and on Capitol Hill as well. But really, the wins are a true testament to the profile and the long-standing relationships that this industry has built on Capitol Hill, that we've been able to build it on both sides of the aisle with Republicans and Democrats, members of the Senate, as well as the House. Your ability to build those relationships, whether in the past you've come to ABC or you've hosted these officials at your plants for plant tours or done roundtable events, it mattered. Over the past few weeks, as there has been a flurry in Washington of phone calls and emails, our boating champions were answering our calls, hearing us out, and they're still doing it to this day as we kind of dig through the provisions of this bill and answer your questions. But I want to highlight some of the key wins. What we asked for, I guess it was 3 weeks back when it was just a concept of a stimulus bill, and what ended up being in the final package. We know that small businesses are the lifeblood of this industry, and to see $350 billion of loans secured for small businesses is truly a win for the industry. And we wanted to make sure that the small business standard was applied for individual industries, so that gave particularly boat manufacturers can apply for those loans with up to 1,000 employees. We advocated for and received delayment of payment for Social Security payroll taxes, modification for net operating loss, and a program that this industry has found successful in the past, particularly in the Pacific Northwest, a state short-term compensation program. I'll get into some of those details, but we think it'll be really important as businesses make some critical decisions. We know that this industry is the base is small businesses, but there are also many really important critical medium-sized businesses, and pleased to see a new lending program as part of the CARES Act that will be administered through the U.S. Treasury, as well as grant program to help us all educate and advise businesses on best to utilize these recovery efforts. Next slide. So as we dive deeper into the CARES Act itself, there's 3 buckets. And the first bucket is direct aid to workers and families. This is what's going to help keep money in people's wallets and even get some more money in. I know many of you have heard, of course, about the rebate check that will provide a direct taxpayer check of $1,200 for individuals, $2,400 for joint filers. There is a phase out at a $75,000 cap for single filers, but again, trying to keep money in people's wallets. Unemployment insurance has been expanded. We understand that businesses are making tough decisions and layoffs are already inevitable. We've seen the latest unemployment numbers and expect those to continue to grow. But what this bill does is provide $600 a week up to 4 months in additional federal benefits that's on top of the state unemployment insurance benefits. And lastly, student debt has really saddled many individuals and families. What this bill will do is delay those student loan payments, the principal, as well as the interest for the next 6 months. Next slide. So the second bucket is really support for small businesses. There are various provisions within this CARES Act that are aimed at helping small businesses during this financial uncertainty. Next slide. As a business owner, it's really important for you to answer this question first. And if you're trying to deem what are the various provisions that are going to be applicable to you. If you are a business with less than 500 employees or a boat manufacturer with less than 1,000, on the left side of the screen, if you answer yes to that, that is a suite of available options to help you either for short-term loans, financial planning, tax breaks, and deferments. That's on the left side of the screen. If you answer no to that question, so your employee threshold either exceeds 500 or a boat manufacturer that exceeds 1,000, there are still a lot of available options to you as part of the CARES Act, and we've kind of outlined that on the right side of the screen. I'm going to go into more detail on many of these provisions, but I think this is a really good level set. And if you're looking into the CARES Act and what programs and policies are available to you, you must answer this fundamental question of basically, how big is your company? Next slide. So I really want to highlight the Paycheck Protection Program. This is a new program that I think will be a lifeline for many of the small businesses out there. If you have fewer than 500 employees or you meet what we're calling the industry standard size, so that's 1,000 employees for boat building, you will be able to apply for a loan, which will be distributed through over 2,500 lenders as well as the Small Business Administration. That loan program, this Paycheck Protection Program, is available starting today, and it will be open until June 30th of 2020. How much can you get? You can get 2.5 times your business's monthly average payroll cost with a cap at $10 million total. This will help you to pay 8 weeks really of coverage for your payroll costs, salary, wages, healthcare, rent, and utilities. Now, this is really important to know. If you keep the folks on your payroll for the next 8 weeks, this will be a complete 100% loan forgiveness. The purpose is to keep people on your payroll, give you as an employer a break, and basically have the government pay for them. Now, if there is any reduction over that 8-week period in terms of your employees or a greater than 25% reduction in their wages, then that portion will not be forgiven as a loan, but it will nevertheless be subject to a very low interest rate capped at 1%. Again, the goal is to keep people on your payroll, to keep the lights on, and really have the government help you fund that at 100% loan forgiveness for the next 2 months. Next slide, please. So how do you calculate that average payroll cost? Because that's going to deem what your overall loan it will be. It's you do the sum of your payroll costs minus any excluded payroll costs. The excluded payroll costs to consider are any salaries that are above $100,000, and you cannot include payroll or income taxes. That ends up equaling to your total payroll cost. You're able to multiply that by 2.5 times, which is your maximum loan amount. So for some shorthand purposes, let's say you have an annual payroll of $120,000. You have no excluded payroll costs within that. Your average monthly payroll is $10,000. Then your maximum loan amount will be $25,000. Again, this is if there are any differences in what is not forgiven as part of the loan, the interest rate has been established today as 1%. And 75% of the money that you get must be used for payroll. So you are able to use a portion of that, like I mentioned, for utilities and other costs, but at least 75% of that must be used to cover your payroll. Next slide. So I know this is gonna, you probably already have a million questions going through your mind, so hopefully I can start to answer some of them. The first is, what if you are a company that's owned by a larger parent company, you have several brands or several locations? How do you answer that first question of your employee count? Well, the number of employees across all brands or locations must be aggregated. So long as there is common governance, ownership, or direction, then those individual brands and locations are treated as one. For those of you familiar with SBA, this is the affiliation rule. It was waived for a really small set of industries. Ours was not one of them. So you do have to aggregate all of your employees where there's common governance or ownership. If your facility is shut down and you don't have anybody working, that's fine. You can still apply for this payroll protection program. It's really the purpose is to keep them on their payroll even when your operations are not running. If you've already instituted a workforce reduction, you can apply this retroactively to February 15th. Bring those employees back on your payroll and again, have the federal government really pay for your payroll costs. As I mentioned before, the caveat is any salaries that exceed $100,000 cannot be applied to the program and will have to be tabulated in your maximum loan amount cost. Now, if you already have an SBA loan, you can still apply for this. You don't have to necessarily go through your existing lender. There are over 2,500 financial institutions that are going to be making these loans available, banks, credit unions. I know many of you have already had those conversations with your local institutions. For the most part, that's probably going to be your quickest line to get some more information. Now, a few caveats that I want you guys to keep in mind. First, if you use the payroll protection program, you cannot then receive tax credits for payroll costs. This is an either or scenario, so you'll have to make that judgment based on your financial conditions, but the payroll protection program gives you cover for your payroll, so you are not then allowed to get the tax credit for payroll costs. This loan is not considered taxable income. And as I've mentioned before, if you have any wage reductions above 25% or employee reductions, that portion is not forgivable. It will be subject to an interest rate of about 1%. But if you're able to maintain your workforce as it is without a more than 25% reduction in their wages, then the government will forgive this loan at the end of the term 100%. Next slide. There are some other SBA programs available in addition to the payroll protection program. Many of you might already be aware of economic injury disaster loans. This is again for small businesses. It provides up to $2 million and you can get basically a cash advance in as quickly as 3 days. If you already are an SBA loan holder, the SBA will cover all existing loan payments for borrowers up to the next 6 months. Next slide, please. So I want to highlight another program that was included in this CARES Act. Many of you may already be aware of it. It is available in 23 states, but it's something that you should consider as you're making some of your employment decisions. This is an unemployment compensation system that provides partial unemployment benefits to workers whose hours have been reduced. So as an employer, if you are looking at your workforce and considering layoffs or reduction in hours, this gives you the flexibility to reduce your overall payroll expenditures by having a reduction in overall hours. You're going to avoid layoffs and be able to still maintain your skilled workforce. But it gives you a break, and it also gives your employees a bit of a safety net where they're then able to apply for unemployment benefits for a prorated portion of their wages, which have been reduced by this reduction. Now, it is on you as the employer to come up with a plan working with the appropriate state workforce agency. That has to be approved as an employer. But once it is approved, again, you can reduce your overall payroll expenditures, and your employees can then be then receive partial unemployment benefits. Again, you as the employer has to initiate this STC application process. This has been funded quite significantly within this CARES Act stimulus package. And for those states that currently do not have it, there's also significant funding to help those states get online as soon as possible. Next slide, please. The third bucket of the CARES Act is really aimed at economic stabilization, particularly for those distressed industries, whether it be the airlines or cargo or tourism. That's kind of the main crux of the provisions on economic stimulation. But there is a provision that I want to bring to your attention, particularly for our medium-sized companies. Next slide. So if you are a business with between 500 and 10,000 employees, there is a $450 billion basically line of credit that's going to be out there. It's going to be administered through the Federal Reserve's 13.3 program. And the conditions that have been outlined so far are that you must maintain 90% of your employees, and you're prohibited from offshoring jobs or having any abrogation of collective bargaining rights. Now, I will say that's really all the details we have at this moment. This is something that we are in communication, obviously, with Treasury as they begin to map out this program, but it is a significant amount of money, again, aimed at more of your medium and larger sized companies that do not otherwise qualify for SBA assistance. It will be administered, as I said, through the Federal Reserve's 13.3 program. More details to come as soon as we find that out. Next slide, please.
Hey, Nicole.
Yes.
Nicole. Yeah, I just wanted to put a bright yellow highlighter through that point, is that so much of what we're hearing about now and what most, if not all of you, are most interested in right now is the PPP program, what was set up through SBA. I think it's really important to note that this piece that Nicole's talking about is far less defined in the legislative language in the CARES Act. There, as much as the SBA program was pretty prescriptive and referencing existing mechanisms for making these kinds of loans to small businesses, I mean, we're clearing up a lot of confusion in the days to come. There's a lot of sorting out to do. It is actually in many ways much clearer than this other pot of money that Nicole is talking about for small and medium-sized businesses. So I want to make sure everyone's clear that on that one, the going is going to be much slower. It could be a couple more weeks before we really know how Treasury is going to administer this. So it's an important distinction.
Thanks, George, for that clarification. So in terms of additional business relief, as I mentioned at the outset, there's obviously these major loan programs that are going to be out there, whether you're a small business or a medium or larger size business. But there are some tax breaks and write-offs that you should consider as well. Included in the CARES package is a modification of net operating loss, payroll tax credits, Social Security tax deferment, 50% write-off for business interest expenses. This is an increase from previously set levels of 30%. Immediate recovery of AMT credits, as well as an immediate write-off of any facility improvement costs. Next slide, please. Thank you. So digging it into the payroll tax relief. So there's a tax credit available. It's a refundable payroll tax credit for 50% of wages that are paid by employers whose operations have either been suspended due to the pandemic or whose gross receipts are 50% lower than in the same quarter of the previous year. There's also a payroll tax deferment. So your employer's share of the Social Security tax can be deferred, with the first half due at the end of 2021 and the second half due at the end of 2022. The key to note with this payroll tax relief is you cannot apply it if you have already taken out or you will plan to take out a loan through the payroll paycheck protection program. So this is, again, an either or scenario of tax credits and deferment versus a payroll coverage. Next slide, please. Okay, as respect to modifying net operating loss, what this stimulus package does, it will allow net operating loss from 2018 to 2020 to be carried back 5 years. And also it removes the taxable income limitation so that you can fully offset this income. Next slide, please. Okay, with that, I'll turn it back over to you, George, to kind of give us a bit of perspective and what we're preparing for already and we see on the horizon with more government assistance.
Thanks, Nicole. So the main thing I would say as we think about what's on the horizon is that there's intense speculation already, of course, as to what Congress will do next. You're seeing some clear lines drawn already in terms of timing. I'll start there. Speaker Pelosi has been out there this week talking about the need for Congress to move to the next package of legislation quickly. She has already tasked leadership and committee chairs with gathering input and ideas from Democrats in the House. If you look at what her counterpart, Minority Leader McCarthy, he's talking about a slower approach and taking stock of what the CARES Act, the effect it's actually having. And then Majority Leader McConnell has taken a similar posture this week, actually explicitly pushing back against Speaker Pelosi, saying that we needed to pause and get some sense of the effects the CARES Act is having or not having. I would say for my part, given in particular the brutal numbers we've seen come in this week on unemployment and some other stark realities we're seeing play out in the economy day to day, that it's reasonable to expect they're going to move sooner rather than later. I say that, though, with the massive caveat that they're not here. Both the House and Senate are out. They're not due back till the 20th. There has been absolutely no movement towards any kind of remote voting. Neither Pelosi or McConnell has been willing to even contemplate that as of yet. So if you just think about the logistics of enough members coming back to even move legislation, that could make debates about timing almost academic. I think it's important, though, as you hear more speculation and squabbling about timing and content, is we really have to focus here in DC, the MMA team, on an assumption that they'll move sooner rather than later. And we are working right now, just as we did through the CARES Act, and that happened very, very fast, to make sure that the allies we have, this industry has in the Hill, and we have a lot, are getting our input now because they are drafting language and ideas. Unfortunately, we saw this come. The CARES Act came through the Senate. I believe it was 97-0. It might have been 96-0. And then similarly, bipartisan support in the House, although there was a little last-minute drama. That's not going to be the case with this next package of legislation. Will be, and again, to go back to the example Nicole laid out and we discussed early in the presentation, if we think back to the stimulus package moved through in 2009, many Republicans voted against that. It was a far more partisan exercise with stark lines drawn between Republicans and Democrats as to what they thought should be done to recharge the economy. That's something we can expect this go around as well. I'll just touch on a few things here that we already know are coming through in the important conversations about what could go into a next package of legislation. I'll mention first that, we can go to the next slide. On tariff relief, which Nicole mentioned already, that's a drum. You can go to the next slide, please. That's a drum we started beating loudly, and it's one we've, of course, been beating ever since this administration took action on the tariff front early in the administration. It is one of the most readily available release valves that the president could immediately turn and help companies in this industry and beyond this industry. It's a tricky one. Congress does not have a lot of options when it comes to. Sorry, I think it might be one slide off. I'm on tariff relief. Congress does not have a lot of options here. This is really going to be up to the administration. We've seen some limited relief, as you see in the first bullet there, on 301 tariffs, but we'd like to see this administration do a lot more. We're very fortunate that Nicole in particular has real expertise in trade policy, and we're talking to the right people in the administration. But as I think those of you who've been affected by this administration's trade policies, those decisions are made in a very tight circle over in the West Wing, and not in a way that they've historically been made at USTR, for example. I would say, as much as Congress has limited ability to legislate on this, we do have the right members of Congress saying the right things about tariff relief. And one thing noted here is a clear call from a bipartisan set of members of Congress for at least 90 days of relief. So we hope that Congress gets louder on that in a bipartisan fashion, and that it has some effect on the president, although to date, the president has explicitly balked at doing anything major on tariff relief with 301 in particular. Okay, just sticking on administrative actions before we move to what Congress might do. You can go to the next slide. The Defense Production Act is a relatively obscure set of authorities the president has at his disposal. You know, there has been a lot of consternation as to how this administration has tapped this. It has been historically something thought of to be applied across a given industry. So, for example, not singling out one automaker to shift to helping produce respirators, but instead to move to compel all domestic auto producers to do something like that. But as I'm sure you all have noted, the president got into a spat with GM, and the selective use of DPA has been something that even Republicans on the Hill have openly questioned. You'll note in the third bullet the reference to GM having been pressed with DPA, and a few other examples here. But I would say, even since we were putting this slide together, you're already seeing today and late yesterday that the president's expanding his use of DPA. It's an open question as to whether anyone in this industry might be touched by this. I don't think we're seeing any signs of that. And I would say that we can, if there's one thing we've learned so far, is this does not appear to be something the president's eager to use. So I think it's reasonable to expect that it's going to be pretty limited and pretty targeted, and I would be surprised if this ends up touching this industry. So we can move on to the next slide. So those are just a few thoughts on what the president could be doing administratively that might affect this industry. As we think about Stimulus 4, we will call it for now. As I mentioned earlier, what we've seen so far has sort of added up to what was done under TARP. This has been a stop the bleeding exercise. The next package would be the first where Congress would turn to actually providing stimulus. Now, I'll add, though, at the top that it's very clear as we're seeing how the CARES Act provisions are being implemented, that a lot of what's in the next package is going to be extensions of the things established in the CARES Act. So, for example, you see the third bullet here on extension of payroll loans. There are going to be lots of things that are in the CARES Act that are going to be extended. The other big question is where things might be expanded. So, as this industry is going through the PPP process, it's a great example of where we're going to need to be collecting and collating input from you all as to your experience. On an almost hourly basis, we are coming upon examples that did not seem to have been contemplated by Congress. I cannot emphasize enough how messy this legislating was. It was a massive package, $2.2 trillion. It was done very quickly. And there are lots of technical fixes and adjustments that they're going to need to make and that they will make in a fourth package. So I'll park that for now, but just know that this won't just be stimulus. A lot of this is going to be extension of CARES Act provisions and fixes. And so again, as we see things that were not dealt with in a way that were truly helpful to this industry or more broadly applicable for this industry, we got to be on top of those and tap our friends on the Hill to help us fix them. Of the pieces where you're starting to see some consensus, the biggest and clearest one outside of things having to do with the CARES Act is on infrastructure. It's become a running joke in DC that we've had about 20 weeks that were called infrastructure weeks, where people thought there might be bipartisan agreement on making some big federal investments in infrastructure. And those weeks have come and gone many times. But clearly, between Democrats in the House and actually the president himself, who tweeted he wants to see a big, bold $2 trillion infrastructure package in this stimulus piece of legislation, it seems reasonable to expect that we're going to have infrastructure in here. And that's good news for the boating industry. A lot of what the DC team works on and has been working on day to day and month to month is calling more attention to the infrastructure needs specific to recreational boating in this country, which historically have not gotten the attention they deserve. So I'm happy to say that we have pieces of legislation or provisions within larger bills that speak to this industry's infrastructure needs. And we're putting a lot of work in right now on making sure that those are where they need to be when Congress turns to putting this package together. And as I say, in the House, that's actually already happening. So the surface transportation bill that's typically shorthand, the highway bill, was already being teed up for action. It seems likely that will get folded in. Water Resource Development Act, WRDA, again, another place for us to address some infrastructure needs, was being finalized, at least in the Senate, and to some degree in the House. It's another one that could be considered pretty much ready to go. And then you'll see here we noted the trust fund, which gets dealt with inside the highway bill, and NMA have put a lot of work into having that ready. So those are just examples of some things we could expect to see. I think the battle lines are going to be sort of at what you might expect from Democrats in the House in particular, and with their counterparts over in the Senate. There's going to be a continued emphasis on spending well, and actually we saw a piece of legislation floated during the CARES Act negotiations that showed some of the signals in terms of priorities for Democrats, and Republicans are going to have different priorities. And as much as the money's been flying out, concerns about how to pay for some of this stuff are going to come back into these debates. So I think I'll stop there. There's lots more under discussion as to what could go into this package, but we wanted to hit just some of those core elements for you. And Nicole, turn it back to you to take a look at what's going on with the state.
All right, thanks, George. So there has been a flurry activity as much as we have been engrossed in what's happening here in Washington. Obviously, governors are taking actions with stay-at-home orders. Essentially, yes, can you hear me?
Yep, we can hear you.
Can you hear me?
Yes, I can hear you, Nicole. I think we all can.
Okay, sorry. So as I was saying, there's definitely been a focus. Okay, good. As I was saying, state actions have been, there's been a flurry of activity at the state level. Governors are taking action through executive orders, issuing stay-at-home, designating certain businesses as essential. We've also seen a flurry of access restrictions, as well as some state assistance to help kind of shore up some of the financial uncertainty that's happening in various states. The best resource for you to take a look at, we have several of these up on nma.org/coronavirus, is we are almost on a daily basis updating the state activities that are happening with respect to governor's orders. So many of you are looking to see what are the essential businesses that are being designated. Do you fall into that or do you not? We are doing our best to help pinpoint for you the exact provisions in those executive orders that matter to marine manufacturers or marinas or repair facilities. Those are kind of the three big buckets that we've been paying attention to, as well as any access restrictions that are happening there. I will tell you that we are in constant communication, particularly with boating law administrators, as well as state natural resource directors, as these decisions are being made. We know that there have been some significant restrictions as far as boating and fishing is concerned, and we are doing our best to have those conversations while also balancing the needs of what is the true health and safety concerns for citizens. So this is an incredibly complex position that we're all in. Obviously, we want to make sure that as much as voting that can be done that includes social distancing and other health precautions can still be preserved. But we are working kind of the back channels to have those discussions and really for those restrictions that have already gone through to make sure that the boating industry is set to be on the other side of it and be able to have open access as soon as practically feasible. The other point I want to mention here, and many of you have come across this, it is in our document, is CISA. So there are federal guidelines that designate what is really considered critical infrastructure in businesses. This is something that has been adapted over even just the past few days. It is just federal guidance. So it's important to remember it's not a mandate. Some states are taking that federal guidance and applying it wholly. Others are making their own essential business designations. And what we've also seen in other states is maybe their interpretation of CISA is a little bit different. Particularly for our industry, maritime is included as a whole sector, but how different states are applying, whether it's recreational or commercial maritime activities, can be a little bit different. So without going through all 50 states again, I think going to our website, looking at the state-by-state directory, we have a full state team that's on board to help answer any questions. And really, it's best to look at the exact provisions of these executive orders to determine how your business operation would fit into them. Next slide, please. Okay. So as far as state fiscal response, I know we're talking about just an unimaginable amount of money, if you will, that has been already pushed out by the federal government. But even at the beginning of this, we saw many states react quickly to enact budget legislation in response to COVID-19. Those are those gold states that you see now. I expect that there will be a lot more of this to come. Many state legislatures, just like Congress, are in recess right now. Some of them had to close abruptly due to health concerns. We expect that many of them will come back online towards the end of the year to wrap up any holes that they see or budget matters. As George said at the very beginning, there is a lot of money for states and local governments that was included in the CARE package. And so states are really going to be looking to see what money are they getting from the federal government, what are those gaps that they might need to take measures to fill. And this is something that our team will be closely monitoring so that we can help pair you not only with federal resources, but with state resources as well. Next slide, please. So I know we have thrown an incredible amount of information. It's a 1,000-page bill. It's definitely been a process to comb through it and decipher all the provisions. I will leave you with this resource guide. So as I've mentioned, we are continuing to update. We have a standalone page within nmma.org/coronavirus where we're providing up to the minute updates, whether it's state, local, federal, providing you with fact sheets on a lot of the information that we covered here. So I encourage you and your employees to visit that often. Included here, you'll see a guide to the Paycheck Protection Program. It has a bit of a calculator, so it'll help you, of course, to make the calculation of what your expected loan amount could be under that Paycheck Protection Program. We're also embedding some links here, of course, on how to apply for those SBA loans directly through the Treasury and to find those 2,500 plus financial institutions that are going to be dispersing this money. There's a flow chart. That was kind of what I described towards the beginning. If your answer to the question is less than 500 employees or 1,000 as a boat builder, it'll kind of give you a bit of an easier way to navigate what are the various provisions available to you. and lastly, our state resource guide. So with that, I know that we've had several questions come through. John Michael, do you want to tick through a few of those as possible? And I will remind you this has been recorded. We will send a copy of the recording as well as this entire PowerPoint deck to you. And any questions we're not able to answer, if we run out of time, we will make sure to get those out to all attendees shortly thereafter this call. So John Michael, I think we have time for a few questions.
Yeah, the majority of questions are about PPP. Here's one specific one. If we have already furloughed employees and apply for PPP, can we bring them back and the loan still be forgiven?
Yes. So you can bring those employees back. The retroactive date is February 15th. And you can use their wages or the previous wages as part of your calculation in applying for the PPP loan.
Staying on that topic, do you mind running through just a few more specifics on the PPP program? Who's eligible? What are the thresholds? What are the percentage of folks that you can and cannot furlough to get your loan forgiving? There's a bunch of questions on that specific topic, so I think we're a refresher on that.
Sure, happy to do it. So the first thing that you should consider is what is the size of your organization. If you are a business with less than 500 employees in general, or if you are a manufacturer with less than 1,000, you would be eligible for that program. Okay. Now, to find out how much you would be eligible for, is you need to take your average payroll or your annual payroll cost. From that amount, there are some deductions that you're going to take. If you have any employees that are paid over $100,000, you need to take that out of your annual payroll cost. You also need to deduct any payroll taxes or income. There's another provision that if you have any people on your payroll that do not reside for a portion of the time or for a significant portion of time in the United States, they would have to be taken out there. But there's really very few deductions other than overall salary and some of your payroll taxes. So you take that amount, that gets your average monthly amount, and you multiply it by 2.5. And that is going to give you your maximum loan amount. Now, it's capped at $10 million, so if your maximum loan amount exceeds $10 million, you would only be able to get it up to that $10 million time. You are able to apply for this loan either through your SBA authorized lending institutions, so your credit unions, your banks, or you can go through the SBA itself. If in 8 weeks you keep those folks on your payroll and you do not reduce their salary greater than 25%, that total loan will be forgiven. It's 100% forgiveness. Now, if you have to make reductions in salary greater than 25%, or you do reduce your overall employee count, then that portion will not be considered forgiven and is subject to a very low interest rate loan. What we're hearing is about 1%. 75% if you get this loan, 75% of that money that you get must be used for payroll. So the calculation of how much you get is based on payroll. You can use some of it for utilities and rent and other things. 75% has to be used to pay your payroll. We are hearing, and as we've mentioned, this just came out today, but typical issues about collateral or personal guarantees are not going to be required for this. We expect that no payments on this loan will occur for at least 6 months. This is going to be processed on a first-come, first-served basis. Now, it's $350 billion worth of money, but we know that there are so many small businesses that are going to be seeking this. So I would encourage you to do it sooner rather than later. And again, it's really aimed at being able to provide you with the ability to keep folks on your payroll for the next 2 months. As I mentioned, the resource guide that's been included in this, it's a really good checklist of how to calculate it. Again, But hopefully that kind of gave you another brief overview of the payroll protection program.
And lastly, on this subject, before I move on, can you explain a little more about how folks apply?
Any other questions, John Michael?
How folks apply for these through SBA or local lenders, and where that list would be available?
Sure. So in the resource guide that is provided, it gives you a sample form. I would advise that you should contact your local lender and ask them if they are an authorized SBA provider. They're going to be the ones that are going to be easiest to help you navigate this. But included in those links was the actual form, so you can see there what is required. Many financial institutions are doing this directly through the financial institution, so you don't have to go through SBA, or you can visit sba.gov to apply through them directly. So your options are an authorized lender or sba.gov. The form that is tentatively required, as you'll see it, is in our resource guide. And it is open starting today. I will say, I know there's a mad rush of people going today. The sooner the better, of course. There may be, we do anticipate some delays, but it'll be open from now until June 30th. I think we have time for maybe one more question, John Michael.
Yeah, lastly, there's a lot of questions about access to outdoor recreation and getting folks out in the water. What is NMMA doing to work with local and state elected officials to make sure access is available when it is safe?
Absolutely. So we are working with our broader coalition of the Outdoor Recreation Roundtable, helping to spearhead those efforts. We've sent letters to all 50 state governors, encouraging them to allow outdoor recreation as robustly as feasible. We've already done that. We're continuing to have communication, as I mentioned, with voting law administrators as well as with state Department of Natural Resource agencies. We've found it successful on the front end to be able to have those conversations and try and have as much outdoor recreation preserved as possible. For those states that have already taken really active or really restrictive means, we are continuing to have those conversations again to try and open them back up as quickly as possible as the health concern dissipates. We're also in communication, as many of you have seen, our federally managed lands and waters have been restricted. It's a really difficult situation. I think we all have unfortunately seen the news articles of the boat parties and the raft-ups that are happening there. But we are working really closely with our coalition partners and using really the angle that we have built over the past 3 years of this Outdoor Recreation Roundtable to provide our industry as a place of respite during these uncertain times, and to be able to encourage and allow to do that as safely as possible. And lastly, I'll just point out, Discover Boating has been putting out some really good tools of how to boat responsibly with social distancing and other considerations. And so we're trying on the consumer angle, obviously, to encourage those efforts as well. All right. Well, I know that there are several other questions that have come through. In respecting all of your time, we will make sure that all of those who have registered for this call, you'll receive again a recording of it, as well as a PowerPoint slide, and we will spend the rest of the afternoon trying to answer all of your questions and any specifics. I will also offer you, if you have some specific questions, to email taskforce@nmma.org. I know many of you have already set up phone calls to try and walk through some of these programs, or you might have some specific questions tailored to your business. I'm happy to jump on the phone with you and answer those questions to the best of my ability, or also point you in the direction of some of our experts in the field. So I appreciate your time today. Again, wishing you all the health and safety, and we will continue to be here for you as a resource during these times.